$500 payment per month and you put that car online to an Uber driver for $425 a week. If you triple pay it, you will make back probably around $4,500. Hello and welcome back to Car Rental University. I am your host, Alex Withrow. Today we're going to talk about if you are in an underwater loan with a car payment, how to get out of that in a fairly non-painful way. Before I get into that, click below, grab the 5 things you must do before starting a car rental business. It also comes with the Car Share Growth Guide, which comes with a lot of great information on where to put your cars in the city by city zip code based on which car share platform is the strongest. Definitely check it out. And also give this channel a subscribe. We're constantly talking about all things car share and car rental related. So I've been hearing more about entrepreneurs putting their cars on Turo, getting underwater a little on the car loan or the lease loan. My general feeling about this is that, frankly, this is why I always buy cheaper cars and don't want to finance too much, is because the likelihood of you getting underwater with a car that's like $25,000 or less, it's very uncommon. It's never happened to me. The only time it's ever happened to me is when I got a car that was about $43,000 and I financed a good amount of that. So that's the only time I've ever had an underwater loan. If this happens to you, it happens on occasion. It's not like that common, but it does happen on occasion. If it happens to you, don't panic. Don't freak out. Sometimes, you look at the loan and you look at the value and you see you're upside down a little. If you don't know what that means, to be underwater on a loan, it's basically the delta between the payment that you owe and the value of the car based on the mileage. So let's say, for example, you have a $30,000 loan and you have maybe a $26,000 value on the car. Therefore, you have a $4,000 negative equity that you are kind of on the hook for. This is how I recommend dealing with this. First of all, if you can refinance the loan and get a lower monthly payment, do that if you can to just lower the payment. So if you can get the payment down from $600 a month to $500 a month, or down to $400 a month, whatever. If you can do that, great. That's not always possible, but if you can do it, it's always a great option to do so. Check out nerdwallet.com, something like that, to get an auto loan refinance. I would look at that. If that does not work out, if you can't lower the payment at all, no worries. First of all, you need to stop renting your car on Getaround or Turo. You're just not gonna make enough money to fix this situation. Now, what I have advised people before in this scenario, I get clients on occasion who reach out to me and say, I'm underwater, what do I do about this? What I'm gonna tell you sounds a little counterintuitive, but it actually works if you run the numbers. So let's say, for example, you have a car that is about $4,000 underwater in negative equity. So just like the example I used, you have a $30,000 loan, but the value is at $26,000. What I would do in that scenario is I would give the car to an Uber driver and put it on a private rental agreement with a long-term driver. As I've talked about on this channel, you gotta vet the driver, you gotta cross all your T's and dot all your I's in this process. If you do not know how to do private rental agreements, I do have a whole course on it called the Private Agreement Playbook. I really recommend respecting this form of agreement and doing it the right way, because it can cause headaches if you don't know how to do it. That said, hear me out here, look at the numbers. If you put that car on a private rental agreement, and let's say you have a $500 payment per month, and you put that car online to an Uber driver for $425 a week. That's pretty standard for a base level sedan in terms of a rental agreement. So if you are making $425 a week, that gives you $1,700 a month. Let's say you take off $150 for insurance. Let's say you're clearing $1,500. You're netting $1,500. You're going to have to either double or triple pay down the loan each month. So let's say the loan payment is $500 per month. If you double pay the loan, you will make back probably about $2,500 to $3,000 over the next 6 months of positive equity. If you triple pay it, you will make back probably around $4,500 in positive equity and erase that. So if you're like $4,000 in negative equity, you can pretty much fix the situation within 6 months or so. Now, you may be thinking, well, if I put this car with an Uber driver, he's going to drive more miles on the car. Wouldn't that exacerbate the situation? In the short term, he will be driving more miles, but because of how much you're paying on the loan, double or triple paying it, and if you cap that driver at 5,000 miles a month, which is pretty standard for a driver, don't let him drive $7,000, $8,000, $9,000. Just be clear with the driver. I need you to only drive $5,000 a month. That's probably about 35 to 40 hours a week of Uber driving. Obviously, you want to check in on the mileage, whether you're tracking it through an app or just through taking a picture of the odometer or whatnot. But in that scenario, because you are making more revenue through a private rental agreement and you are double or triple paying on that loan, you are taking a short-term spike in mileage on the car, but the revenue that you can double or triple pay onto the loan will offset that. It'll sort your situation out probably within 6 months. So that's how I would recommend dealing that and doing that. And like I said, if you've never worked with Uber drivers before, Uber drivers are kind of a different beast. It's a different whole thing. It's very different than Turo or Getaround. Like I said, I would not put the car on Turo or Getaround in this scenario because it's just not going to make enough revenue for you. But that said, I've seen Dave Ramsey talk about this before, and he's telling people they need to go, deliver pizzas for the next year and double and triple pay on the car. That's ridiculous. What I'm espousing here is a much simpler way to deal with this. You will have to forfeit most of your profit on the car for 6 months, which obviously takes a hit to your business. Obviously, you want to keep a really good handle on the loan to value ratio on the car. Overall, this will fix your situation within 6 months, typically assuming you are at 4,000 negative equity or less. So drop some comments below. I know sometimes it's a little confusing for people what I just explained, but I promise you look at the numbers, it does work out. I've done this for myself. I've done this for other clients. It does work. Before I go, click below, grab the 5 things you must do before starting a car rental business. I will catch you in the next episode. Thank you.